Revealing the truth about Tesla stock. Tesla is like Apple in 2012. Hey guys, welcome back to my channel. In today's video, I'll be sharing with you a quick technical analysis of Tesla stock and why I believe Tesla is just like Apple back in 2012. Which means that there's more room for Tesla stock to grow in the future. In fact, much more room to grow in the future. Even in midst of the decline that we are seeing in Tesla's stock price right now. Okay, this is the chart for Tesla stock, and you'll see that recently Tesla stock experienced a steep decline in prices. If we take the high over here to Tesla current stock price over here, we see that there's about a 28% decline in Tesla stock price. And this is definitely something to pay attention to if you are a Tesla stockholder. And if we use our Fibonacci retracement tool over here, from the base to the peak of the move over here, right now, as of the filming of this video, Tesla's stock price has fallen below the 61.8% level. That is also something significant for us to pay attention to. The next level of support that I'm paying attention to is the 78.6% Fibonacci retracement level. Usually when a stock retraces, the stock tend to retrace anywhere between the 38.2% Fibonacci level and the 78.6% Fibonacci level. Those are the range in which prices tend to decline to in a retracement. But though Tesla stock is still within the 38.2% retracement level and the 78.6% retracement level, the fact that it has broken below the 61.8% level is still something to pay attention to. That's a quick technical analysis of Tesla stock. Right now, we'll take a look at the longer term picture for Tesla and why I believe Tesla is just like Apple in 2012. Because of Tesla's stock price decline in the last few weeks, many investors are starting to question whether Tesla stock will decline even further. And we also see this in news articles such as Forbes. So in this video, by referencing Tesla to Apple back in 2012 and showing you their similarities, why I still continue to believe in the long-term future for Tesla. Let's take a quick overview of Apple back in 2012. Back in 2012, Apple was one of the leaders in the smartphone industry. At that time, the iPhone only came out in the past few years. But the iPhone has established Apple as one of the leaders in the smartphone industry. Because of the wild success that Apple enjoyed with its iPhone, more competitors came in the smartphone industry such as Samsung and Google. And this provided increased competition for Apple. Furthermore, Apple's iconic co-founder, Steve Jobs, just passed away in late 2011. So back in 2012, there were worries whether Apple is able to fend off competitors and continue to innovate, even in the midst of increased competition and the death of their iconic co-founder, Steve Jobs. And if you take a look at Tesla now in 2021, Tesla is also one of the leaders in the EV industry currently. But the company is facing increasing competition from competitors such as Neo, Lucid, and Xpeng. And in midst of this 28% decline in stock price for Tesla, doubts are starting to creep in whether the company is able to fend off competitors and continue to innovate. Do you see some of the similarities now that Tesla is facing that Apple faced in 2012? Right? Both of them are leaders in their own respective industries, but at the same time they face increasing competition from competitors. And both face external issues on whether the individual company is able to fend off competitors and continue to innovate. One of the concerns with Apple back in 2012, the focus was on Apple's ability to innovate and continue to fend off competition from its competitors. However, many people overlook the fact that Apple was also building its ecosystem at the time. Most people was focused on the smaller picture, but they overlooked the bigger picture that Apple was focusing on, which is to build their ecosystem. So you can see that back in 2012, how Apple was starting to build its ecosystem through its products such as the iPad mini, the iMac, Apple TV, the MacBook Pro, and the iPhone. So while the focus was on individual products, Apple was actually focusing on building its ecosystem. Apple was looking to the long term, because by building its ecosystem, Apple is able to monetize long after its products has been purchased. For example, Apple was building its infrastructure for its iCloud, its App Store, Apple Fitness Plus, and other Apple products. And you can see that how all of this came into place right now in 2021. But back in 2012, many people overlooked this fact that Apple was still building its ecosystem for the long term. And things are also very similar for Tesla right now in 2021. A lot of focus is on the cars that Tesla currently produces. Right, you see many people focusing on Tesla cars right now, such as the Model S and so on and so forth. Right, so the focus right now is on the cars that Tesla is currently producing and whether Tesla is able to fend off competition from other electric vehicle car makers. These people are focusing on the smaller picture of things. What they are overlooking is the bigger picture of things, which is the AI technology and FSD. FSD stands for full self-driving and its potential. Do you see certain similarities between Tesla and Apple? Back in 2012, many people were focusing on Apple's iPhone, but what they overlooked was the fact that Apple was also building its ecosystem at the time. And fast forward to today, in 2021, we see that it is Apple's ecosystem and not its individual products that is the big picture. For Tesla, in 2021, a lot of the focus is on Tesla cars right now. But I believe that fast forward a few years later, many people will look back and realize that they were focusing on the smaller picture of things. And they will start to realize that the big picture was actually the AI technology and the FSD potential of Tesla. And if you take a look at AI driving technology, FSD, and autonomous ride-hailing, this market will generate more than $1 trillion in profits per year by 2030. Right? So that's 1 trillion with a T. And out of this $1 trillion in profits per year by 2030, automakers such as Tesla could enjoy profits of up to $250 billion. Okay, so you might be wondering, how does Tesla fit in all of this? So how does Tesla make money from this autonomous ride-hailing market? With the AI self-driving technology, or FSD, Tesla car owners are able to use their cars as taxis in the future. What Tesla can then do is Tesla can charge a fee for using their ride-hailing platform. Okay, so for example, if you own a Tesla car in the future and the FSD technology becomes a reality, what you can do after using your car at the end of the day is that you can let your Tesla car go onto the road by itself and start to taxi people around. And this can be done even though you are not in the Tesla car itself because of the FSD technology. So riders who do not own a Tesla can hire your Tesla to taxi them around. And this is where Tesla as a company comes in. Tesla can create a platform such as Uber and then charge a fee for using their ride-hailing platform. And there's huge potential in this autonomous ride-hailing market, as even after Tesla has sold its cars, Tesla is still able to monetize long after its cars has been purchased. And again, do you see the similarities between Tesla right now and Apple? Back in 2012, Apple was slowly building its ecosystem so that it could one day monetize long after its products has been purchased. And we can see how Apple is monetizing its ecosystem right now through its services such as iCloud and Apple Fitness Plus. And what Tesla is doing right now is similar to what Apple was doing back in 2012. Tesla is building its fleet and its AI self-driving technology. And if we fast forward a few years later, Tesla, like Apple, is able to monetize long after its products has been purchased. Those are the similarities between Tesla and Apple, and why I believe Tesla is like Apple back in 2012. If you have learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed to this channel, make sure you subscribe to this channel because each week I release new videos about investing, trading, and the stock market. I'll see you in those other videos to your financial success.